Eric Muade for the weekend of December 27th and December 28th. Let's take a look at the markets. The US closed on Friday on light trading session. We see that the markets were pretty much unchanged as far as the Dow is concerned. The NASDAQ was up about 0.7%, S&P 500 0.33%, gold was up close to 2%, and we see that crude oil was down about 1.27%, and the VIX obviously was almost unchanged. For the week, S&P 500 was up 0.88%, closing at all-time weekly closing highs. Take a look at the Dow, which also closed at all-time weekly closing highs, up 1.4% for the week. And the NASDAQ closing at multi-year highs, also fresh highs for the week there, up 0.87%. So let's take a look at the charts here. We did end the week with the NASDAQ above the prior weekly closing high of 4791.68. And the price looks good as long as the market is holding above that prior high. Looks like the breakout is in play, and that's a good breakout after 3 weeks of rest on the NASDAQ after making that high. So we've been 3 weeks below that 47.91 price range and now closing above that. That's a nice breakout. Problem is now we are looking at a market that is coming back to a prior resistance level on the weekly RSI based on this line there and also based on the prior break line there. And this is where the market has been finding it difficult, and every time we've come here we seem to have hit some type of resistance, and even recently there. So if the market can continue and break above those two lines, that's bullish. If that becomes resistance, especially if we have a down week confirming resistance there, which would confirm the top lines of the weekly RSI, that would be a problem for the market, and especially if it moves back below 47.91, that could be a break of this breakout. So we need, if you're a bull, you need the market to stay above 47.91. If you'd like the market to drop, then wait for it to move back below 47.91, suggesting that the breakout is stalling. Right now, if we take a look at the MACDs, the MACDs look very good. In fact, the main MACD seems to be breaking out of a range. So this, if it holds above that and continues trading above that resistance level, which is this prior high, then the market should be firing on all cylinders to the upside. All right, go to the NASDAQ daily. So we see a slight closing high there, which is good. So the market does need to stay above 4800 if it's gonna do well. The one problem we can see if we get a pullback from this range is we are making higher highs, but the RSI is trading below 61.8. So that could be a problem if the market does pull back, confirming that it made a higher high and the RSI hasn't moved above 61.8. That could be a very bad or bearish negative divergence, which should, if that takes place and the market pulls back, confirming negative divergence, that could be a reason why this market could stall. And so that we need to watch for that. Also, there was a break. We had broken below that level before. And that break there was when the market came off the highs there and had this pullback here to test this breakout, which held and a bounce high. So we are back in this RSI level. If we show resistance there day to day, then maybe this breakout above 4800 is a trap and the market does pull back. But I guess the best way to look at this is if the market continues holding above 4800, then the bulls are still in control. Take a look at the MACDs. The main MACD here bounced off 0 and is now crossing over above 0. So that's a good crossover. So momentum continues being to the upside, which might explain why the market gradually has been grinding higher. Now we take a look at the hourly, and we can see here that we continue seeing this slight new high on the hourly, but the RSI is making a lower low. So that could be a problem on the hourly, that now we are continuing seeing a higher high, but the RSI is giving us negative divergence. So we need to watch for that. But as long as both MACDs are trading above 0, which is what they are doing, above 0 on the main MACD and also above 0 here, the momentum is still to the upside. For the market to be under pressure and go lower, both MACDs need to be trading below zero, which is not the case right now. So the bulls do continue being in control. Go to the Dow weekly, and we can see a breakout above 17,958, which was the prior weekly closing high. And so the market is holding above that. And just like the NASDAQ, we come back to a tricky spot. And I say tricky because this is where the market has been stalling, on that level on the weekly RSI. So for the market to continue moving high, it does need to show strength by moving the RSI above that line. Otherwise, if we continue showing resistance and we trade back below the line, then we are going to be due for another short-term pullback. Take a look at the daily for the Dow, and we can see here making higher highs in the price, but we are also looking at the RSI making a slight lower low. And actually what's interesting is this resistance, or at least where the RSI is trading right now, right there, is very close to this prior line. And so this line had been a resistance before, which was here, and we had a serious, or at least a relatively sharp decline after that. And so now coming back to this line, if we extend it, so if we extend the same line, we see that if the market does show resistance, and it looks like this in the coming days, then this is going to be a sell signal because of that resistance line, and also confirming negative divergence. So we need to watch for that. If the market starts pulling back in the new week, then that could be a technical reason why the market could stall. The one thing I do like about the market is the fact that it is holding above zero and bouncing above zero on that main MACD. Go to the hourly for the Dow, and again we see we are making a higher high in price on the hourly, but we are making a lower low on the RSI, and this RSI line connects the highs on a hourly chart on the RSI, and I'm using a period of RSI 26. So that's what I'm seeing there. And actually I think this could be a reason for a pullback. You can see declining strength while markets are making higher high. That tends to be a recipe for a market to pull back. Now the key here is if the MACDs eventually move below zero. One of them is very close, so if the market does eventually move the MACDs below zero, that's when you know that now we are due for some type of a pullback. We go to the transports weekly, and we see that they are holding above the prior weekly breakout of 91.98, and so the transports need to hold above that. If they can defend 91.98, then that's a good breakout. And so just watch that price. If it moves back below that, then it's a failed breakout. Then we can expect the market to be under some type of resistance. Let's take a look at the transports on the daily. So Dow Transports daily, and we can see here very close to daily closing highs, if not just at daily closing highs there, but the RSI continues showing a lower low. And so that could be a problem, I mean a lower high. So we are making highs here, but the RSI is not making any new ground, so that could be a problem. And take a look at the hourly for the Dow Transports. And just like the Dow, we can see a line of resistance from a prior. This band of resistance here is where the market had stalled beginning of December, which was there. So the RSI has come back here at this rate. If this turns down, then this is where the market stalls short term. How much of a pullback that's going to be, it's hard to tell, but it looks like the hourly there is stalling. Take a look at the S&P 500 weekly. We did close at a fresh all-time weekly closing high above the prior weekly closing high of 2075.38 or 37, and now we are making a higher high in price, but you can see that the RSI has not made a higher high. So this could be a problem, especially if the next week or so gives us resistance on the top side of this RSI on the weekly. That could be a problem. Also, we can see that this line was the break point before the most recent pullback. So there was a break there before this pullback that began here. And so we draw a straight line from there like that, and we can see that the market showing resistance there. If indeed this becomes resistance, then I would expect that this is going to eventually pull back. So there's a lot of reason to think that this is actually not the strongest looking breakout. But the key, if you want to keep it simple, is as long as the market is holding above 2075.38, the market should be okay to the upside. Breaking below 2075, the prior weekly closing high, could be a sign that the market is getting fatigued and probably due for some type of a correction. And also don't forget that we have resistance coming on the top sides of the weekly RSI. We go to the daily for the S&P 500, and you can see a slight higher high on the daily, but the RSI is not making a new high. So that if the market turns down and confirms resistance with that negative divergence, then I would expect a pullback at least to test the 50-day moving average. The hourly for the S&P 500, as you can see here, this line here was close to where the market did stall here, and you can see that even though we are making a higher high in price, again the RSI is not making a higher high. So that could be a problem. We need to watch for that, and the key here is to watch the MACDs. As long as the MACDs are both above zero, then the market continues being strong, and right now both MACDs are indeed above zero. If you take a look at the S&P 500, you can see that ever since we moved above the prior resistance line on the hourly on the RSI, once we broke out here, which is this movement here, the market has held above the extension of that line. So as long as the market is trading above this line in this general area, the market should be safe, or at least you can say that the market is not about to pull back. So I would watch for that. And also you can see that on the 30-minute chart for the S&P 500, both time frames are still defending the level above zero on the MACD, and so the MACD is holding above zero on the 30-minute, on the hourly, and on the daily. Really does show that the market continues being strong. Let's take a look at one stock here before we take a look at some world markets. Take a look at Apple on a weekly time frame. We go back and discuss this support line on the weekly, and this line connects the lows going back to 2013. This is where the market has been finding support as far as Apple is concerned, and we can see that on the weekly, that is where support is also being found. So as long as it's trading above that line, I would say the stock should be due for a bounce. We also see that it held the 10-week moving average, so everything looks okay there because the stock is trading and finding support where it has been doing so over the last 2 years. And I can show you on a clean two-year weekly chart, just draw a straight line connecting the lows here on the RSI. You can see that we did find support exactly where support needed to be. So as long as it's holding above that, that's good. If it does break that support line, then maybe that's a problem, but for now we are holding and bouncing on the line, which is good. Again, if we break below that line, then maybe we can start asking questions. If we go to the monthly for Apple, you can see that the RSI continues trading above 69.1 on the monthly, which is a sign of strength. So that should suggest that the stock is still looking healthy. Let's take a look at some world markets. We take a look at the Canadian market, and we begin by taking a look at the weekly here, which is still trying to defend and move back above the 10-week moving average. We'll see what happens there, but it's kind of in no man's land, because as you can see, it's either, you can say there's a resistance here on the top side and some type of support recently somewhere here. So it's kind of almost in no man's land in terms of the Canadian market. Let's take a look at the daily for direction here, and the daily coming back and trading back above the 50-day moving average, which is okay. And we can see that if we draw the line that way, now this line gives us the break point, which was this movement somewhere here, And so as long as it's trading underneath this line, it could be bearish, and that's where it's trading right now. Another view could be if you take a look at a prior break. So RSI break somewhere here, draw a straight line like so, and you can see that ever since then, every time we store below that line, we get a pullback in the market, and we did so recently here, which was this high. So you can see that the RSI has come back here. It would make sense if it can't move above the blue line that it stalls. We take a look at the hourly for the Canadian market, and we can see that the RSI had stalled previously, which was the highs here. Let's draw that correctly somewhere. So let me take that off and draw it correctly. You can see that all we need to do is connect that line to somewhere there, either that way or that way. So either way, looks like somewhere around here we could stall. So the hourly is showing that if we stay underneath this line, could be resistance. If it trades above that, then maybe it has a chance of recovery. But if this continues being resistance, I would expect the beginning of the week to be showing some type of a pullback there. Now this is a Brazilian market, and I'm showing you weekly chart going back 7 years just because of the data that I want to share with you. And you can see that there's a line here where this market has been finding support. If you go back and test this line, every time this market has moved above this line, you've seen a multi-week move to the upside. So this is 7 years worth of data, and you can see every time the market has come to this level, we've had couple months and couple weeks to the upside. And so you can see recently we found support here. So the conclusion, if the market can bounce and continue holding that line, we should see a couple weeks to the upside as far as the Brazilian market is concerned. And also we see that it's connecting the lows going back to mid 2013. So this line connects the lows on the weekly RSI. I would expect the Brazilian market, based on this, to be giving us a movement to the upside that would last a couple weeks. Otherwise, if we break below that line or this line, if we break below that, then maybe we are going to be in another bearish phase. Right now it looks like support on that weekly chart, so let's conclude that it looks poised to move higher over the next couple of weeks, next couple of months, and also could be bearing some type of directional bet in terms of commodities, because if the Brazilian market is doing well, at least bouncing higher, maybe the commodities are also due for a couple weeks of bounce. Let's take a look at one of the European markets. Take a look at the French market, the French CAC. You can see that if we take the weekly chart and draw the line connecting the lows, we seem to be trading in what looks like a wedge here. And so this might take some time to resolve. So looks like we are sideways in terms of this chart here, and could be in a sideways action for a while until either we break out above that wedge or we break down below the wedge. Also, if you take a look at the German market on the monthly, we are very close to breaking out or holding above 10,000. So if it can break out like the Dow is doing and the S&P 500, maybe there's more upside. So we need to watch for a breakout above 10,000. If it can sustain a move above 10,000, I would say that's a fresh breakout and maybe suggesting there's more upside momentum. Otherwise, if we can't reclaim that 10,000 level, maybe this market also is due for a pullback. Take a look at the FTSE, the London market from a long-term monthly view, and let me show you a clear or a fresh looking chart without all these lines. And so we were looking at a long-term monthly view for the FTSE, almost 25 years worth of data. All I'm going to do is show you the prior break coming into 2000. So this break point right there was somewhere here before the drop in 2000, 2001. So we draw a straight line right there, and we can see that every time we've had movement below the line, this market has some type of a bearish movement. We did that there in 2007, and also during this move here, which happens to be these highs on the monthly, and again here which was these highs here. So all I'm saying here is if we can hold above this, that's good. The problem is if we break below that, then maybe we are due for some type of a move lower in the European markets. Also, so that's one view. The market needs to be trading above that if it's going to continue trading higher. There's also another line which needs to hold, which is this line connecting the lows right there, like that. If it trades below that line and trades below the prior line, if it trades underneath those two lines, that's going to be bearish. And so we need to watch for support right now, or for a move below those two lines, which would be indication that this market is due for a serious pullback. Also, you can see the channel on the price there connecting the monthly lows. If we break below that, then maybe this market is due for some major correction. Now, just like the Brazilian market, we take a look at the Hong Kong market, and we can see if we connect the lows on the RSI on the weekly, this seems to be where support is being found. So maybe this market is also due for a bounce. Otherwise, if we break below that line, that could indicate that this is a break and we should see another drop lower. So either support is what we see here, and so we have to conclude the market is finding support. Otherwise, if we break below this blue line support on the weekly RSI, we should expect lower prices. Now, if you take a look at the Chinese market on a monthly chart, you can see that the RSI continues holding above 69.1. That's why it's become very strong, and with this absolute straight trajectory here. And also you can see that the RSI did move to 3-year highs a long time ago, or a couple months ago. So the RSI broke out here to 3-year highs, which was somewhere around here. And since then, we've seen this straight shot in that Chinese market. Take a look at the daily. And on the daily, we can see that if we draw a line connecting the lows like that, so this line connects the prior lows, you can see that it had a nice close, or at least a nice move on Friday, and because of the line that we had just drawn connecting the lows is where it found support right there and bounced on that line. And so that makes sense. We also see that the weekly RSI continues being very strong. So that's the month. Go back to the weekly. Weekly RSI continues trading above 69.1, which might account for why this market has moved from somewhere here and all the way high. So this RSI being a sign of strength explains why the stock or the market is doing very well in China. Take a look at the Kospi. And we take a look at the Kospi on a weekly chart. We have this line of support where it came back about 2 weeks ago and seems to have held that support line. We also have RSI showing support here and also connecting the lows. So it makes sense that the stock is bouncing here. If it continues bouncing on this line, just like the Brazilian market, maybe it's due for a bounce over the next couple of weeks or so. And the last time it had come back to that line was here, which was at this lows, and we had a multi-week, multi-month movement to the upside. Now on the Kospi, that's the bullish view. If you want to look for a bearish view, you can see that there's a line connecting the lows, and if this market slips to 3-year lows on the RSI, that could be a problem. So slipping below 3-year lows could set the stage for a massive drop. So I've been watching that over the last couple of months. Right now the weekly looks okay, but it could very easily drop to levels not seen on the monthly RSI, which could lead to a big drop if that takes place. If we take a look at the Japanese market, we can see that the RSI continues holding above 69.1. It continues making new highs also, which makes sense. If we go to the weekly, we can see some type of bearish developing, negative divergence on the weekly for Japan there on the Nikkei. You can see higher highs on a weekly time frame, but the RSI continues making a slight lower low. So that's one reason to be a little bit skeptical of the most recent move. And we can also see that this is where the RSI has been stalling and the market has been seeing some type of resistance last time it stalled here with uniform activity above the line back below it was that high, and so we've come here and seems to be respecting that line. That could be resistance. If the market does show resistance and confirm by moving below current levels and showing resistance on the line, that could set up for a nice pullback also. Take a look at the Indian market on a weekly time frame. We've been expecting support on this prior breakout level, and that breakout level is what started this move here. And that move was very successful because it took the market to nice moves here in 2014. We draw a straight line from there. So the market does need to be above that line if it's going to move higher. We see that it's had a down week, looks like it's about to break, and also needs to hold this lows line. So it does need to be moving back to that line, does need to recapture that line, and thus otherwise it's looking like it could stall. So we need to hold that line, or maybe we stall as far as the Indian market is concerned. So the more we drop be underneath this level here, the more it looks like we've seen some type of short-term major highs. We go to the daily, and on the daily for the Indian market we are trading around the 50-day moving average, which is okay, and we are also back to where it has been finding support. So this line is what began the most recent move in February off the lows there, and the market has come back to this level a couple times, which was this lows, and a nice move higher. We bounced on the same line, which was here, for a nice move higher. We had uniform activity below the line back above it, which was this lows there. So if we can hold above that line, that's good. If the market now starts trading underneath that line, then maybe this is a different type of market environment there. So holding above the green line is bullish. If we break and move below that green line and trade in the red zone, that would suggest that now the 50-day moving average has become resistance, and maybe we are due for a pullback. I guess in summary, you'd like to see the Indian market move above the 50-day moving average if it's going to do well. Otherwise, the more it stays underneath the 50-day moving average, the more the chance of dropping and moving lower increases. So this concludes part one of this weekend's analysis. Before we do that, let's take a look at the monthly charts for the major averages. So the monthly charts, the RSIs continue trading above 69.1 on the NASDAQ, which is a sign of strength. Take a look at the Dow. You can see that the RSI continues trading above 69.1, which might explain why it's been very strong. And again, we see that S&P 500 continues trading above 69.1. So that concludes part one. Encourage you to log in for part two. Have a great weekend. Eric Mwathe, good luck, peace, and blessings.